Hi, David Bassanese here, Chief Economist at Betashares, and just wanted to share with you a review of 2023 in terms of the economy and financial markets. And an outlook for 24. And I think the key theme of the past year has been resilience. We've had central banks continuing to raise interest rates in the face of economic growth remaining overall fairly firm, particularly in the global economy, particularly in the United States economy. Unemployment rates around the world have stayed pretty low. Look, in Australia, growth has slowed, but I mean, the labour markets remain fairly tight. What has this meant? We've actually had equity markets rebound globally pretty solidly. The global markets are up around about 16% in terms of total return. The US market almost a 20% return as I speak in early December. Our market, unfortunately, somewhat flatter at this stage, showing a very little gain, something like 0.5% return. And the big difference between Australia and global markets this year in terms of equities has been the strength of the technology sector again globally, particularly given the new, mania interest in artificial intelligence, which has added an extra boost to technology stocks. The fact that Australia is underweight technology has dragged on our performance. Also, materials and resources have done not as well globally this year, as with commodity prices falling back, and Australia tends to have an overweight in that area. So underweight the areas doing well, overweight the areas doing not so well, constrain the Australian market this year. Delving a little bit deeper into the equity market, what we've also seen is that equity prices globally have rebounded. Even with interest rates going up, bond yields over the course of the year have tended to rise. But equity valuations have nonetheless increased in hopes of stronger economic growth going forward. And also forward earnings have recovered. So we've had valuations go up, earnings go up. But as a result, the so-called equity risk premium of markets has come in. So the market is looking, certainly global markets, looking a little bit expensive given that fact that equities have gone up even though bond yields went up. It also meant that the lift in bond yields this year has meant that bonds had another pretty poor year, not as bad as 22, but overall total bond returns in the Australian and global market close to flat. At this stage of the game. In terms of the outlook, I mean, I think 24 is looking pretty encouraging. What we are seeing is that inflation globally is continuing to come down. I think it is going to start to broaden in terms of declining inflation to the services sector. Where inflation has been sticky. Growth will slow further, again, but not recession. I'm not anticipating a recession, but I am anticipating a period of softer growth with the unemployment rate drifting up maybe 0.5%, maybe even a full percent, but potentially not much more than 1%. That should allow central banks to pivot toward interest rate cuts. And so as a result, that would support the bond market returns and also support the equity market returns as well. So on the proviso that, growth can hold up and inflation continuing to come down, as I do expect, the outlook for 24 for both equities and bond markets, I think, is looking encouraging. And what we may also see in 24 is a bit of a catch up in areas outside of particularly the US big tech sector, which has been so strong for so long, but valuations are looking pretty stretched. And I think investors may start to look around for other areas of the market to invest in. So potentially the Australian market, potentially emerging markets where valuations look somewhat cheaper. That's it for now. Thanks for watching. I wish you all the best for the festive season and all the best for the new year.